Welcome to Shadow of Truth, and today is Thursday, January the 19th, 2017, and your hosts are Dave Franzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. What's going on, Dave?
Well, I'm getting very excited to put the finishing touches on my latest mining stock journal. I got an interesting idea in there this week. A lot of updates on existing names, and after what happened yesterday afternoon in the gold market, I have a sneaky suspicion we might be talking about that today.
That and popcorn. We got to pop lots of popcorn.
Right. For tomorrow's...
For the clown show tomorrow.
For tomorrow's brown stuff show.
Oh, well, let's talk about some gold and popcorn.
That sounds great.
Gold is always a good subject.
Yeah, because I just wanted to talk really quickly about, what happened yesterday, because gold got hit during Yellen, when Yellen gave her speech, and I'm sure they schedule her to speak right after the COMEX closes. The price of gold got taken down about $5 or $7 during her speech. And the reason is that she was saying that she expects multiple rate hikes between now and 2019. And my guess is, after the COMEX closes, the market goes very, very quiet and illiquid, or it tends to.
Yes.
And it's easier to push it around. And my guess is that the hedge fund algos saw the sound bites or the headlines and dumped paper gold and bought the dollar, because the dollar spiked up at the same time that gold was hit, and it had to have been the hedge fund algos. So, and I'm sure the banks were in there helping the process along. To think that she's going to raise interest rates is idiotic, and anyone who believes that, it's like, how many times are you going to let the Fed fool you? Last year around this time, they nudged rates up 1/4 basis point in December, said they were going to raise rates 4 times during 2016. Well, we saw how that worked for them, right? They did it once, another quarter of a percentage point, and they waited until the last meeting in December to do it. So
the very last minute, just like they did in 2015. Same thing.
Yeah.
And they said, and they did it again in December of 2016, said that they were going to have multiple interest rate hikes this year again.
Yes.
And another lie.
I'm not going to guarantee that the next policy move is actually an easing of monetary policy, but I think we will see that move at some point this year. I don't know what they're going to do at the next few meetings. No one does. They're not going to raise rates.
Well, Draghi came out this morning and said that they were going to hold the line, and continue to do their 60 billion monthly, whatever, euro.
They're doing asset purchases, yeah.
Yeah, so
they're printing money and injecting it into the banking system.
Exactly. But then everybody starts screaming about China's doing a 1 trillion yuan injection. What's the difference? What's the difference if I do a slow morphine drip, or if I do a shotgun blast? It's still the same. The outcome is still the same.
You got to remember, 1 trillion yuan translates into, not a huge number in dollars.
Right, but it's still it's
so.
You understand my point, though. Whether it's a one-time, one-off, say $1 trillion. If you do $1 trillion market manipulation at one time, or if you do $1 trillion market manipulation over 3 years, the outcome is still the same.
Well, yeah. Here's the thing, and one of the things that gold's back above 1,200. By the way, they took it down a little below 1,200 overnight. Here's the difference between what China's doing with everyone's trying to keep their banking system afloat.
Right.
And that's why these central banks have, negative interest rates, easy monetary policy. They're printing money. Even China's doing it. But the difference is that China's central bank is hoovering gold. They're just sucking it up. The whole country is. And outside of a few other Eastern European countries and or Eastern Hemisphere and some of the Southeast Asian countries, no one else in the world, no one in the West is buying gold like this. Now the ECB system stopped selling their gold per the Washington Agreement, which allows them to sell 400 tons a year. They stopped selling their gold around 2009 or 2010, and the thinking is that essentially, even though they're reporting gold holdings in their central banks, they're out of it, sort of like the Fed, or they don't have a lot left. Clearly Germany's trying to repatriate their gold now.
Yeah, apparently the pace is picking up.
Well, that's what we're being told. I mean,
Yes.
They may be just reporting that news for the benefit of their public, because they were getting a lot of heat from some of the party segments over there, plus the public, about it. So who knows if those announcements are designed just to pacify the public or not. But my point here is that the hit yesterday was done after the COMEX closed, when the market's not liquid, and Yellen comes out yapping about interest rate hikes, and the hedge funds just have their knee-jerk reaction. The Huey index got taken below 200. Well, guess what? While we've been on the line here, the Huey was green for a few minutes, so it was down early this morning, and it's bouncing back. And the spot gold price per Kitco which isn't really the spot price, but let's say it's just a good index. It's back at 1,200, which means the futures are back over 1,200.
Yeah, and I've added investing.com. I've added their ticker, and right now, according to them, it's 1198.50.
But that's what happened with gold yesterday. It was, again, it was all done in the paper market. There's nothing realistic about it. And contrary to the Western media reports, India continues to hoover gold, and China continues to hoover gold.
Yeah, and in India, I was reading an article over at the Saker this morning. It's written by Peter Koenig. The banned banknotes constitute about 85% in value of all cash in circulation. India is a cash society. About 97% of all transactions are carried out in cash. So when Modi did his thing, as we discussed the other day, it's really created a terrible situation for what's happening for the people of India. Now, are they still converting these banknotes into gold? More than likely.
Oh, they are. The premiums over there are positive. They've been varying between $3 and $7 or $8, which means in general, it means that type of premium's high enough for legal kilobar import. Here's what Brimlow reported in one of his newsletter updates yesterday. I guess Bloomberg published an article that said Indians buying less gold as cash crunch bites. And his comment is, it's primarily evidence that friends of Bloomberg are not in gold. If India's domestic gold market was as weak as presented, there would be a significant discount to the world price. And obviously there's not. And then Brimlow goes on to say, in reality, the government has struck a shattering blow at the trust Indians have in holding wealth in any form accessible to the authorities. When things finally unglue, India's propensity to hold gold will probably be found to have risen.
I would agree with that.
Right, and that's kind of along the lines as what this Koenig guy said.
Mr. Koenig goes on to say, only slightly more than half the Indian population has bank accounts, which ties into what giant, the gentleman that I referenced a few days ago about only 300 million out of the 1.3 billion people having access to the internet. So if you take those two items in tandem with one another, half the people have bank accounts, only a third of the people or less have access to the internet. And now the government has once again mistreated these people for no apparent reason. Why would they not turn to gold? Gold has been part of their heritage for hundreds, if not thousands of years. And the reason that they hold gold in the first place is because they don't trust the government, because the government has mistreated them throughout all of history. So why wouldn't their gold holdings go up? I mean, logic still rules, at least in some
Well,
places.
it's more like it's Gresham's law.
Right.
Bad money chases out good. So to the extent that the Indians, and especially a big push for Indian gold buying comes from the agrarian areas, where the farmers sell their agrarian products for cash, and then they go and they buy gold with it. They do it; it's right away. They don't want to hold the cash. So, as you know, what that does is it puts more of the cash, paper money into circulation, and it continues to remove physical gold from this system, and that's Gresham's law in action.
It only makes sense that would be happening.
It's going to start happening in the United States soon. I mean, to some degree, it's been happening with silver for a long time. And I attribute that more to the poor man's gold effect of silver, where guys like us, silver and gold are eventually interchangeable. You can use them in the same respect, but silver is more fungible, and you'd rather buy a few rolls of silver eagles than 1 ounce of gold, right?
Right.
It makes it, first it makes you feel like you have more, but also it's more fungible. Yeah. And the Huey just went green again, so that's to me, that's your forecaster of where gold's going.
I think this year, I don't know if you listened to that interview I did with Bill Murphy yesterday, but
not yet, but I plan on it.
I mean, he's a perma bull. He happily admits it, with good reason. But he's still looking at the 21 level as far as technical, on the technical side of silver, as far as it moving to the real upside. And
sure. I don't really get caught up in the technical analysis. I mean, for me, you're at a level with silver where when they hit it, you want to buy it. And I noticed that Silver Doctors is running a special on silver maple leafs. And the last time they did that, I bought some, and I'm probably going to buy some more either today or tomorrow.
Yep. I'm going to be right there with you. Actually, I have one more thing, and it's related to this. And I was listening to David Morgan and Mike Maloney a few days ago talking about the gold-silver ratio. And I asked Bill about this, and I want to ask you about it. Does the gold-silver ratio in today's world have a place? And because gold and silver are not currently out in the wild being used as currency, but as you and I both know, and as Bill and I discussed yesterday, gold is part of the system in some shape, form, or fashion somewhere. Otherwise, they wouldn't care about it. But from your perspective, Dave, does the gold-silver ratio play a part in why should I care about it from your perspective?
Well, it's the measure of the relative value of silver versus gold. I mean, gold. I agree 100% with Bill. Gold has a function in the monetary system. Otherwise, they wouldn't care about it.
Right.
And they wouldn't be bombarding the news wires with misleading and actually outright false news reports about gold, especially with what's going on with regard to what's going on in the Eastern Hemisphere with India and China.
And Russia.
Bloomberg published one yesterday that was false. So the gold-silver ratio right now is 71. over long periods of time, over thousands of years, the gold silver ratio, has been in the mid-teens, and in Roman times it was 8, as we all know, and that was based on the ratio of how much gold they pull out of the ground versus silver, and they were interchangeable as currency. So they were pulling out 8 ounces of silver for every ounce of gold. So if you wanted to consolidate some of your silver holdings, you take 8 ounces and exchange it for an ounce of gold. I don't know. I'm not going to say that the gold silver ratio is going to go back to that level. I think it easily could eventually, but if we hold this level in the gold silver ratio and move lower, which I am forecasting, I think that'll happen again. It means we're over the course of this bull market since 2001, we'll have established a lower high in the gold silver ratio. It got up to 100 in '08. And I think it got up to, I don't know, maybe the high 70s or low 80s this time around. And we're at 71, and we've been, during the summer, we were as low as 68. And I expect to see the gold silver ratio trend lower this year. Maybe, who knows, it might even go into the 50s. But, again, for me, I use it as a directional indicator for the market. And right now, the behavior over the last year, the gold-silver ratio is telling me that both gold and silver are going higher, and that silver will go higher at a faster rate. And I also use it as a gauge to measure the relative value of buying silver versus gold. And make no mistake that there's plenty of hedge fund money out there that has their algos programmed to trade based on the gold-silver ratio.
Okay.
So that's why it's relevant.
Okay. But the natural ratio right now, according to all the data that we have, is about 9.5 to 1.
9.5 or 10. That's right.
Yeah.
And again, we could eventually get down there. I don't know. No one knows. I'm not going to make that forecast. I'm just going to forecast that it's going to go lower this year.
I mean, I would love to see it. I would love to see silver catapult by 7 times from where it is right now. Nothing would make me any happier.
And it could. And that's another reason why, especially Americans who get what's going on and who are buying precious metals, it's one of the things that attracts everyone to silver.
Well, that's why I got into it, was because of that. And when I first got into silver, it was around 39, 40 to 1 was the ratio. And I've seen that obviously deteriorate, but I still believe that there are laws of nature, and they're called laws of nature for a reason. They're not called theories of nature. They're not called speculations of nature. They're called laws of nature. And this is one of those laws, in my opinion, that there is a natural law that pertains to gold and silver, and it's built into us as human beings. It's been beat out of the American and Western world, but it's still very much alive in the Eastern world. So that's my whole thing.
Well, it certainly stood the test of time. If you want to test that law based on time,
yes,
because gold and silver have existed as money for since the dawn of civilization, and fiat currencies do not last very long.
Come and go like the wind.
Exactly.
Well, all right, Dave. Well, I guess that's as good a spot as any to wrap it up. Unless there's something else you need to say or feel a burning desire.
Yeah, my burning desire is I got to run out and get some popcorn for the inauguration clown show tomorrow.
The clown show begins tomorrow.
Ringling Brothers is shutting down their circus. Well, that's all right. We got a brand new one in D.C., and it starts tomorrow.
Oh, my goodness. Well, I guess we'll pick it up on Monday, unless something blows up tomorrow or Saturday and feel the need to jump on real quick. But otherwise, I guess we'll pick it up Monday and see where we stand.
Have a good weekend, buddy.
You too, my friend.